So here are a few protocols that I am personally deployed into to earn some passive income on both BTC as well as my Ethereum. The first project on our list is going to be Jupiter. More specifically, it's JLP pool. JLP can simply be translated to Jupiter Liquidity Provider. Think of JLP as an index token containing Solana, Ethereum, wrapped BTC, USDC and USDT. Now if you are someone who is already holding some Ethereum or BTC, or you may want to get exposure to Ethereum as well as Bitcoin, but then also want to earn an additional yield of anywhere from 15 to 25%, then this is the perfect place for you. And here you would be able to see the exact weightage of the JLP token. 46% of the JLP token is Solana, 8% is Ethereum, 14% is wrapped BTC, 30% is USDC and 0.01% is USDT. I personally think that getting into this JLP pool is relatively safer as compared to other investments. Of course, you'll get an extra exposure to Solana as well, but depending whether you are bullish on Solana or not, this could be a good play if Solana plays out well in the bull run. So where does this JLP yield come from? Simply put, you are going to be the counterparty to the traders on Jupiter's perpetual decentralized exchange. 75% of the total generated fees is paid back to JLP holders. So depending on the volume on Jupiter's perpetual DEX, expect to earn anywhere from 15 to 25% APY. And Jupiter has been around on Solana for a long time now with very impressive numbers, and the total value locked sitting at $1.6 billion. Next on our list is BMX. BMX is a bit smaller as compared to other protocols that I am going to be mentioning in this video, but it's an absolute powerhouse of a protocol. Like Jupiter, BMX is also a perpetual decentralized exchange on its base and currently live on Base, Mode and Sonic Chain. So how can you earn some yield on your BTC and your Ethereum through BMX? We are going to follow the same playbook as Jupiter's. We are going to be minting the BLT token, which is the liquidity pool token of BMX. Like Jupiter, here too you are going to be the counterparty for the traders, providing them with liquidity and earning fees in return. The current APY sits at 85%, and this return is really good considering the fact that the BLT token is mostly made up of blue chips and stable coins. Here you can check out the weightage for the BLT liquidity pool token. 32% of the BLT token is made up of Ethereum, 16% is Coinbase's wrapped BTC, 5% is Aerodrome, 2% is Moonwell, and the remaining 42% is made up of USDC. Of course, you will get some exposure to Aerodrome as well as Moonwell, but this exposure is going to be very minimal as compared to the exposure you will be getting to Ethereum and BTC yield. Like Jupiter, BMX has also been around for a very long time now. I can personally vouch for the team. They are an innovator in the space. They have been audited with some decent volume. TVL is sitting currently close to $2 million. But if you want to get some decent and relatively safer yield, then you should definitely check out the BLT pool on BMX. Okay, now it's time to get serious. We are going to be moving into some not so beginner friendly strategies. But don't worry, I'm going to try to make it as simple as possible for you guys. But before that, make sure you hit that subscribe button and like this video if you learned something new. I will be posting more educational content on crypto as well as yield farming. And if you would like to see any other topics on this channel, make sure you comment them down. So the next protocol on our list is going to be FX protocol. FX protocol, like BMX and Jupiter, is also a decentralized perpetual trading platform, and they have their own stablecoin called FXUSD. And if you would like to learn more about FX protocol, then I recommend you all to watch this video. Once you are on FX protocol, head over to the earn section, and the pool that we are going to be taking a look at is going to be this ETH plus FXN pool, currently offering an APR range of 28% to 65%. But first, the FXN token is the official token of the FX protocol. So I want you to do your own research on whether or not you would be comfortable on holding the FXN token or not. But the good thing about being in this pool, namely ETH plus FXN pool, is that the FXN token is an highly correlated asset with Ethereum. So how can you check this correlation? Head over to DeFi Llama, scroll to the end and click on this correlation tab. Here you would be able to check correlation for different pairs. For example, in our case, ETH and the FXN token. So what does correlation between two assets mean? To put it simply, it means that these assets are going to be moving in a similar direction, price action wise, of course. For example, if ETH pumps, let's say 5% a day, the FXN token will follow it and pump, let's say 3 or 4%. Of course, it's not a perfect correlation, but there is still some decent correlation, meaning the risk of impermanent loss will be significantly decreased. But yes, the score of correlation between the Ethereum and the FXN token is 0.87, which is really good. So how can you get into this pool? Simply click on here, which will take you to the Curve Finance app. Create your liquidity pool position, after which head over to FX protocol again and then deposit your liquidity pool tokens here. That's it. You'll start earning an APR of an impressive 30% to 60% on your ETH as well as the FXN token. Now for the next protocol on our list, and don't worry guys, towards the end of this video I will be showing you how you can find these yields using one very simple tool. But anyways, we are going to be checking out the Shadow Exchange on the Sonic blockchain. Here you would be able to provide liquidity with your assets like Bitcoin and Ethereum. Two pools that I am personally invested into are these two first pools, namely the Wrapped BTC and USDC pool and the Wrapped BTC and Wrapped Ethereum pool. Now you would be asking this question, why the Wrapped BTC and Wrapped ETH pool? Wouldn't there be too much of an impermanent loss? Well, the answer is no. Because if we check the monthly correlation between the BTC and Ethereum, it has an almost perfect correlation score of 0.94, meaning these two assets are moving very similar to each other. Of course, keep in mind that all of these pools are going to be concentrated liquidity pools, meaning you are going to have to select the range where your liquidity is going to be active on. Similarly, you could also check out pools with Ethereum that are yielding some amazing returns depending on your liquidity range. If you guys would like to see a dedicated video on concentrated liquidity management pools, then let me know in the comments and I will make a dedicated video for it. Now it's time for me to show you guys how you too can find these amazing yields on assets like BTC, Ethereum, stablecoins or any other token that you are holding. Head over to DeFi Llama and select this second option of yields. On here you would be able to see all the yields available on all of the tokens that are listed on DeFi Llama. DeFi Llama is currently tracking 15,000 pools, over 468 protocols on 106 chains. So I'm pretty sure that all the major protocols and chains are going to be listed over here on DeFi Llama. Here you would be able to find some yields on tokens as well as take a look at delta neutral strategies, long short strats, leveraged lending, etc. One thing that I personally like to do and you can follow as well is click on this DeFi option and select this chains option. On here try to look for chains that have a high amount of 24 hours DEX volume. On here take a look at these following numbers. The first one is the 7-day change on TVL and the next one is the 1-month change on TVL. Any chain that has a significant amount of uptick in these numbers are going to have some decent amount of volume flowing through its DEXs and therefore giving decent APY numbers to its liquidity providers. If you are someone who is looking for a shorter term exposure, then you can also take a look at the 24 hours DEX volume. The higher the volume, the more the fees generated and the higher the APR. This metric can of course change very quickly, so I personally like to stick to either the 7-day change and the 1-month change options. Alright, that is it for this video. If you enjoyed the video, make sure you hit that subscribe button and like this video. And in the meantime, if you would like to check out other videos related to cryptocurrency, yield farming, etc., then make sure you check these videos.